The Banking Scene Directors Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
So, Rik, this week's article was inspired by the recent report from Argenta, Deloitte, University of Ghent. And what I want to know is, what surprised you the most about the contents of that report?
Well, it was about financial health specifically in Belgium. It's quite a long report and definitely worth the read. A couple of things that got my attention is that 1 in 3 Belgian households do not make any financial plans for the future, which is surprising, I think. And even in the segment of financially healthy households, that number is only 38%, which means that a vast majority doesn't make financial plans for their future. Still, about 26% of Belgian households save 500 or more per month, and that is slightly better compared to the first report they published. That was back in 2022, where only 19% of Belgian households saved 500 or more per month. But of course, inflation may have played a role in there as well. The most financially unhealthy segment is the age group 25 to 34. Maybe surprised because that's the age where right after university you start earning a salary. Maybe also start to live a more independent life from parents, start living alone, etc. Maybe that's the reason. Their saving efforts went up, but the score on expenses is worryingly low. That has to do with consumption, but also the score in skills reduced compared to 2022. So there is definitely something that needs to be done. And that has nothing to do with people standing on their own or leaving parenthood. That's simple or lack of interest or unable to properly understand what financial health, financial well-being is about and how to make sure that you're not spending more than you earn. Another worrying insights, definitely in terms of maybe like inclusion or equality, is that only 12% of singles are perceived financially healthy or perceive themselves as financially healthy, because the entire report is based on a scoring of a survey they did with people.
There's so many things I can respond to there. The first,
Please do.
When you leave home, I personally think that, yes, you start earning money, but the first thing that you do, generally as a young person, if you can remember that far, Rik, is you go, I've got some money and I can spend it without my parents telling me, and you go and spend it on lots of things. I know that
It's an attitude. I would say you can start saving money.
Yes.
Investing money, maybe.
But I think when you're young and you're carefree, savings and investing seems to be something that older people start doing, and you don't really think about it enough because you're not coached along your life to be thinking like that. You always think of that, pensions as well, things like that. Young people don't think about these things until they...
I think you can't generalize it, but the numbers clearly show that you are right.
Yeah.
Maybe I was an exception in that respect.
The worrying thing is the skills going down. That
Absolutely.
to me is very
It gets
worrying.
increasingly more confusing as well with influencers who self-proclaim to be the expert. You get the crypto thing, there were NFTs and there were stable coins, there were many different concepts which made you believe that it's easy to make money, but it's more Ponzi scheme based, most of them. I'm not generalizing here again, but financial services are increasingly more confusing, I think.
Very much so. Which brings us on to BBVA's use of their digital financial coaches, which I think is fantastic. Personally, I think using AI and data to give very, very personalized nudges and things like that. It's the kind of a thing that we've been talking about, the positive use, the way that you can use AI to do personal recommendations en masse. And their results that you've written in the article look very impressive from an engagement point of view.
Sure.
If that kind of an offering was available to you personally now, would you use it?
Well, I would definitely test it because essentially the tool is nudging you or giving you some tips and tricks, not just about financial products and financial services, but more about how to change your behavior without too much impact on the day-to-day life, maybe. If I would have a tool that helps me get a better understanding of maybe some subscriptions I'm not using, tips and tricks that are extracted from my payment behavior that may have a positive impact, tips based on my history that help me spend less, sure, why not? If it's not too instructive and not too intrusive, it would definitely be a helpful tool to save more for the future. And that's what I like about the whole BBVA concept. It's not just about let's provide another loan solution or a buy now, pay later to help people spend money when they need it and pay it back later. No, it's really about changing the behavior and the way we look at consumption, but also at money and investing to be more resilient going forward. It's really about changing that financial behavior more than just offering the right financial services at the right time.
Well, I caught up this morning with Anette Broløs, well known to our community as being a very influential voice in financial services and fintech at Finthropology.
I bet we'll also meet her again at Open Banking Expo
Next week. So let's hear what Anette has to say about that.
I think the short answer would be, will it have an effect? Like, can it have an effect? Yes, I think it can. Will it solve the issues in the reports? Probably not. So we have already seen through the years a number of examples of fintechs supporting that kind of behavior, providing nudges to save more and save regularly, and for instance, spend less on coffee and save the money instead, or rounding up payments to plop into savings. So we're seeing organizations like Dreams, like Navid, like Limitless, even turning this into investments. And I think it works. And I think that particularly some younger people like the effect of the gamification. I should expect that some people, on the other hand, would feel that gamification is annoying. If I were to increase my savings, I wouldn't use small amounts that were randomly pulled together. But then probably I'm not in their target group of customers. So that's reasonable. And then I think that for all the groups that have difficulties with their financial resilience, there are different reasons. I think we have seen in our studies that many people are quite smart about their money management, even if they are not really, by ordinary measures, financial literate. So they have difficulties understanding APR or calculating costs, but they have a general feeling about the costs and therefore how they should use money, and they do it sometimes very smartly. Yes, I think so, probably, and relying also on what friends and peers generally do. So that's one issue, that you can be smart even if you're not literate by ordinary measures. And another issue is that some people live on a day-by-day situation with low wages and perhaps being out of a job, struggling with illness. And sometimes people like that tell us that they feel that the solutions that are supplied by banks are too expensive. Even at a basic European account, it's too expensive. So they don't feel they get what they need from an ordinary bank, and they probably wouldn't enjoy being pushed to save the money that they don't have already by their banker or by their banking coach, even if it was personalized. And that's why I think that maybe it won't solve all the problems. And then, of course, there are the people who just turn the head the other way because for some reason they have a traumatic experience, perhaps as children, where if their experienced parents always rowing about money and money never being sufficient and things like that. And that probably would need a different initiative.
Okay, so Annette raised the very valid point that this is unlikely to be for everyone, even though their offering is highly personalized and it's not a one-size-fits-all offering. Specifically, she's saying it wouldn't work for her. But then she does admit that she's probably not their target market. You know, she raises points around the gamification not really appealing to her, and potentially to some people that don't have the money to spend in the first place.
Isn't the idea of gamification that you get incentivized for doing the right thing? Who can be against that?
I think that she felt...
But again, it depends how intrusive it all is, I guess.
I think she just felt it was a bit trivialized for her liking. But as I say, she's not really the target market. But what I'm curious to explore is, and it's an age-old question that keeps on coming up even across our conferences, is how much responsibility should banks be taking for not only financial education, but for their customers' financial health? I mean, somebody recently turned around to me and said, the responsibility should all lie with the banks. They control all the money, or they look after our money, and they should be the ones who are focusing on financial health. And I turned around and I said, in my personal opinion, that's like telling supermarkets that they need to be responsible for my physical health. They obviously sell all the food, and I buy the wrong food maybe, and that's what makes me put on weight. So no, we must make all supermarkets have to be responsible for making sure that my physical health is good. And the person looked at me and went, I get your point. And I went, it's not only the banks. I think that there is a responsibility that banks have. But what do you think? Who do you think should be bearing the responsibility for both financial education and financial health? Because they're two different things, but they are intrinsically linked.
Well, I explained it in my blog as well. I think the report of Deloitte said that all stakeholders need to make more efforts to make sure that we get a more financially healthy society. And as you say, financial health is directly linked to financial education. And I completely agree with that. The only thing I'm a bit worried about by purely pointing to the stakeholders is that some people that may have a higher impact on influencing that financial health may put their head in the sand and not do more than they could. Like, for example, banks. I think banks have more potential in changing or improving financial health. And there are a couple of examples that prove that, like BBVA, like ABN AMRO in the Netherlands with BUUT. But of course, financial health starts with financial education, and education is the responsibility of the government. And there are many other initiatives that are linked to that. So yes, it is a stakeholder responsibility, but I think some may have more impact than others in influencing that. In that respect, I do think that banks have a say in that, and it should go beyond that. But you make a right comparison with supermarkets. And as you raised the question, I immediately thought of my book, New Ethos in Banking. If that ethos of a bank is to improve the financial life of its customers, they have a direct responsibility to do more than average. Just like some supermarkets will do much more to improve your overall health compared to others. You have bio stores, you have other stores that purely focus on selling vegetables and fruits, for example, while others are hypermarkets, supermarkets that sell everything and maybe more in favor of their own P&L than the one of your customers, while others will try to nudge you towards the more healthy stuff. And the same is valid for banks. Some will emphasize much more, I hope so, on that financial health and financial education. And being there, like Argenta, who works with Deloitte on this report, be there whenever the customer has a question, while others emphasize on other initiatives that could improve the bank experience.
Okay, Rik, I'm going to ask a potentially inflammatory question here. Do you think that banks can be objective enough to give totally unbiased financial health advice? Because the financial health, my financial health, may require me to shift some of my products to a different financial services provider. I don't think at this point in time that I could name a bank that would encourage me to switch products. So do you think a bank could actually in the future.
I think you're looking at this from a completely wrong perspective. Improving financial health is not about getting that 0.2% extra on your savings. It's about improving those assets under management at the bank much more than it is about getting a better rate. And that means that improving one's financial health should go way beyond the products. A credit, of course, yeah, you could have a better rate at another bank, but essentially, financial health should be about getting a healthy balance between spending and consuming. It's
Yes.
about reducing the financial stress of people, but that is, I believe, the basis for selling products, not the other way around.
I mean,
So in that respect, I think it's for a bank, it is an extra service more than it is part of a banking service, but that doesn't mean they can't influence it, and probably much more than many other organizations in the ecosystem.
I do think it requires a bit of a
What products
rethink.
did you have in mind that you may need to switch to improve your financial health?
That's exactly what I'm going to bring up, because I think it does require a rethink of the way that banks approach, as opposed to silos at the moment, which a lot of them are organized around. So I'm subscribed to a newsletter from a service in the UK called Money Saving Supermarket, and it always comes with very good tips, and it's connected to a number of my financial services, and it will often say to me things like, you could save X £100 a year through a debt consolidation offer by eliminating all of your credit card debt and consolidating it into a single loan with a fixed repayment over this period of time. And when you do the multiplication, it's actually quite a lot of money. It runs into thousands of pounds that I could potentially save over a, let's call it 36-month period of time. Now, I have previously approached a bank that I have left and said exactly that. I said, look, I have a credit card with you that currently has a balance of X. I'd used it to go on a big trip. And I said, I would be interested in consolidating this in a loan. And they turned round and they said, no, you don't qualify for that loan. And I went, but I qualify for the card balance. I want to actually close the card and open a loan.
Well, for me, that's an example of a bank where financial health or improving the customer's financial health is not part of its ethos.
Correct. And that, so I have left that bank. I'm no longer part of it. I have also eliminated that credit card debt subsequently. However, that's the kind of example where I'm saying, because the bank is organized in silos, the part of the bank that was saying, are you eligible for a loan is going, oh no, this guy's got too much credit card debt. He's not eligible for a loan. Instead of going, overall, actually, we could keep this customer that we've had for over 25 years by closing his credit card. He doesn't want it anymore. Well, of course, that then cannibalizes that product line. They don't want to do that. So they would never have that conversation. That's why I say, I think.
But that's why I say improving customers' financial health should go beyond the products. Of course, it's also, it's linked. You need to review the products also in function of the ethos that you want to represent. But your bank clearly wasn't built for an optimal financial healthy situation of its customers. It was about profitability.
100%. And that's where I think that the thinking needs to change. But when we were talking about financial education, and you had brought up, the education system should potentially be expanded to include financial education. I've got one of my sisters as a teacher, and I've actually raised this with her before. And I said, what do you think about providing financial education? And she had mentioned that at their school, they have actually started doing a couple of simple budgeting courses and things like that for the students that are about to be leaving school soon, which I thought was fantastic. So when we're talking about education and possibly educating kids at school-going age, educating kids really resonated with Anette. And she had an interesting anecdote to share about the way that she's seen kids being educated, getting a little bit of financial education. So let's hear what she had to say, which includes her reaction to the offering from ABN AMRO via BUUT.
Yes, I mean, looking first at the initiative with the BUUT, I think we've seen some great initiatives in the Nordics and also internationally reaching out to young people. And I'm often asked, how can we teach children about the value of money if we don't have cash? And we tend to say, well, we know that value is in much other than cash. So yes, we'll find a way to do it, and doing digital is an obvious way to do it. And absolutely, the idea of talking about it will help. And I know that in some cases, parents are really happy to have this occasion to do it together, to look at their phones together and to share the experience of developing knowledge. So I definitely think that this will help. And could we do more? Could we use it? I think that the banking scene is operating in Belgium and the Netherlands. And I know at least that the Netherlands and at least here in Denmark, where I'm based, we have what's called the Money Week, where people talk about money and also encourage bankers to come into school and talk about what is a bank and what does a bank do and why can you use it to save. So and how could you, and they could demonstrate their tools, and that would be a great idea as well. And then I will tell you that I agree with the budgeting and the whole discussion that it's a great topic for schools. Just the other day when I was shopping, because I'm working from home, I'm at a liberty to go shopping in the middle of the day where the shops are empty, which is nice. There was the whole school coming in and two teachers helping children say, so we need 1.5 kilos of rice, and how many packages should we buy then, and what are the best price, which ones will be the most expensive, and that is a great learning experience.
Oh, that's brilliant. A hands-on learning experience for the kids. That's something to think about in the future.
We have a new guest this week, and that is Els Lagrou, a local authority, recognized author and keynote speaker in the field of financial education, and also frequent commentator in the Belgian press when it comes to financial education and wellness. Welcome to the show, Els.
Thank you, and welcome for the invitation.
It's my pleasure. The more because the introduction of this blog also referred to one of the insights that you shared at another blog, and that was on the direct impact of financial health on the health of people, but also the concrete economic return or negative return that comes with a bad financial health. And that aligns smoothly with the study that Deloitte published in cooperation with the University of Ghent and Argenta on the current state of financial wellness. On a high level, what's the current state of financial wellness in Belgium today?
Well, the good thing is that there's a positive evolution. And I think in these times of economic and geopolitical crises, that is encouraging to read this. But of course, the previous study was conducted right after the COVID pandemic and during a period of sky-high inflation. Still, let's call it a good evolution. It has been a wake-up call, I think, for some of us, especially for those who suddenly faced soaring electricity bills or became temporarily unemployed. But we can, of course, not rest or stop with financial education because there is still a lot of work to be done. And more than half of the Belgian population is not financially healthy, which put them in a very vulnerable situation. And that is, I think, for our country, dramatic.
Yeah. Absolutely. It's becoming all more and more complex. I discussed with Andrew as well. On the one hand, financial knowledge is very complex, and because money is such a term, people can have very emotional feelings, positive or negative with it. But on top of that, recently we saw new products, new services popping up, influencers that claim to be the experts that start to sell new products, etc. So it becomes increasingly complex. But that's all very universal. How does Belgium compare to the neighboring countries when it comes to financial wellness?
It's an easy question when we look at our very close neighbors, Netherlands, because of course they are also doing the same study. So Deloitte also has a study running in the Netherlands. And compared to our neighbors, we do not score very well. So why? I think you can attribute that probably to many factors, but I believe, and that's my belief, that in Belgium we are less used to talk about money. There's a big taboo, and it's definitely stronger here than in the Netherlands. And if we don't talk about it, we cannot address, of course, potential
Absolutely.
problems.
Yeah.
Comparing with other countries is less straightforward, of course, because the definition of financial well-being can vary significantly between studies. We must be
Yeah.
how much weight is given to subjective feelings. In our work, what I'm doing with Daily Money, this is exactly what we take into account. And what we are focusing on. So we also look not only to the amount of money that you have, but also how do you feel? Do you feel uncomfortable with when you talk about money? Do you have confidence when you handle money? And in a lot of studies, sometimes it's incorporated, some it's not incorporated, but it's clear that for our country, even if we have a lot of critic on our educational system, we do have good schools. So it's a bit, it's really not good that we have such a low score on basic financial things. So it impacts our financial well-being.
Yeah. What do you think of my opinion that working with stakeholders is very important to improve the financial health, but for banks, it could also be an excuse not to go the extra mile for meaningful initiatives?
I think we absolutely need our stakeholders. So individual initiatives are good because they can go very quickly. They can have, immediately results with impact. They can show it to other companies, other stakeholders. But at the same time, if we don't have our stakeholders, I think we really risk that we will leave people behind. We need stakeholders who support people in a different way, who are not digital literate, who do not have wealth or a certain amount, who are in financial problems, etc. So I think the sector really should join forces, because also then the efforts that we are doing will be more efficiently, because nowadays a lot of the same tools are developed by a lot of banks and other stakeholders. So it's better to collaborate, to share, and to be more efficient.
Yeah. You already referred to the fact that financial health and financial stress is very personal. I listed 2 examples in my blog of banks that individually go the extra mile. One of them is a BBVA coach. Based on AI and a lot of data, they have the ambition to influence the financial behavior, consumer behavior of customers for the positive. How do you look at that? The uptake was apparently surprisingly high, and it was very much appreciated. But one of our other guests, Annette, she said that she wouldn't be that interested because of the gamification, etc. And then money is, of course, something that not everyone wants to deal with.
Yeah, I think we need a lot of tools because there's no one size fits all. So I think it's good that we have more tools with the kind of gamification and a lot of nudging. And so if people have the feeling, or people really can report that they start mapping their behavior, that they become aware of their financial situation, and that they have the feeling that they are better doing their finance, of course that's good. But for me, I didn't use the tool, so it's just based on what I read about it.
Exactly,
But
like
we
me.
have to be, I think, very careful not to reduce everything which has to deal with money. You have to collect more money, you have to save more money, because
Absolutely.
financial well-being is, first of all, being able to live and to have a meaningful life today, tomorrow, and in the future. And of course, you need money, but it's a mean to achieve that. And the tools, we must be prudent with that the tools don't give the people the idea that the most important thing in life is to handle your money and to accumulate money. That's a bit...
No. It should be about reducing the stress given the situation more than growing the bucket.
Yeah. Voilà. Yeah.
In the context of financial education, I think last week ABN AMRO in the Netherlands launched a very interesting initiative that they already announced back in June. That's BUUT. It's for kids and youngsters. It's a bank that allows these young people to deal with their money. It also gives a lot of financial education in the way that they consume information online. And parents have a parallel app as well to make sure that they can follow what's going on with their children's money. For me, that was a very interesting initiative in terms of financial education because it lets people deal with money from a very young age. But on top of that, it also allows the parents to start a conversation. They have a conversation, start a financial situation to talk about with their children to help them be more resilient for the future. What do you think of that?
It's absolutely a good idea to start with financial education. The younger, the better, I would say. And with this tool, as you mentioned, the good thing is you can start a conversation at home. So definitely all good things. I think if a bank develops, and I know the tool, I have seen them, and it's very attractive. The advantage is if a big bank wants to develop that, they have a lot of budget, more budget than other stakeholders might ever have. So they can really develop something nice. So all good, but again, with a small warning that we have to be careful. It is a good initiative, but we must again warn a bit and be attentive that it does encourage young children to spend money. I think we are in a certain moment in time where we realize, we all already say it to adults, stop a little bit, slow down. Before you make financial decisions, think twice, leave it and think about it. And next day, perhaps you're not going to do this transaction or not buying things. And here it is really completely in the same speed and in the same spirit of everything that happens in internet, Instagram, TikTok, etc. So with the same risk that people will learn, of course, but will also at the same time learn to consume. And that's a bit, the disease of this age.
Yeah, no, fingers crossed. And indeed, it was one of the comments that Andrew made when I explained him that the segment that's most sensitive or most financially unhealthy in Belgium is the age between 25 and 34, surprisingly the ones who start working, where Andrew's first reaction was, yes, but if you have a first salary, the first thing is you consume, which for me was slightly different, but maybe I'm not the average consumer or wasn't the average consumer back then. I don't know. But you're absolutely right. It should be used for the better and for the overall picture. And as you shared in the very beginning, to make sure that we feel more comfortable with the financial situation more than just building a bucket of money for the future.
But better a tool than no tool, definitely.
Absolutely. Yeah. Maybe a good way to end this conversation. Els, thank you very much for joining us so last minute. I really appreciate this conversation.
Okay, so Rik, when your kids get a bit older, they're a bit young at the moment, but would you set them up with something like BUUT if it is available for you in your region?
Yeah, sure.
Which part of the concept resonates?
Well, I like the idea that proactively helps these young consumers or young savers to be more conscious about the impact of money on their life and how they can positively influence that financial resilience for the future. On top of that, with BUUT, as a parent, you can also control it, and it becomes a conversation starter for those financial conversations that you want to have with your kids, to avoid that they're only getting trained through TikTok news and things like that.
And I think that that's an important part of financial health and financial education, is that parental discussion around money and starting it as young as possible. So on that note, and looking to the future, we'll wind up today's episode.